Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, September 16th at about 1:30 p.m. Eastern Time. Well, are we having fun or what? Wall Street's main indexes hit near two-month lows today after a profit warning from global delivery bellwether FedEx spooked investors who are already worried that aggressive rate hikes from the Federal Reserve could tip the economy into a recession. The benchmark S&P 500 has fallen below the 3,900 mark, a level we traders considered as a key support, dragged down by a 23.4% plunge this morning in shares of FedEx Corporation. And on that note, let's move on to three charts that may give us some insight into the week to come. So here we go. First chart today is what we always look at. This is a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Whoa, we're having fun today, right? When I captured this chart this afternoon, the SPY was trading at $383.84. That's about 38 on the S&P 500 index itself. And you can see here was our line in the sand at 390, and you can see this little red candle here where the SPY gapped down this morning after FedEx announced the news before the opening bell. So we know that, and also the SPY is trading today at about 20% below the SPY's last closing high. You can't see it here. Back here in January, on January 3rd, our all-time high was $477.71 on the SPY. So we know that the market worked its way through the year by coming down in January and February, rallying in March, falling from March to May, trying to move a little higher in May, then falling down here to its June lows at 362. That's our line in the sand right here. Then the benchmark rallied, it came back up, made some higher lows, which is, I've told you, is a very good thing. Higher lows means buyers are stepping in before price retests the last low. And it rallied up to September to its 200-day moving average and up to 431. So that was good because it went past its May highs, rallied past that up to the 200-day. We noted in this program that the 200-day was overhead at that time and could be a pretty mean resistance if it wanted to be, and so it was. So then the SPY fell back down here to 388 down here on September 6th. Then rallied, and you know, when you see a rally that's this dramatic here at this steep of an angle, know that there's probably a lot of short covering involved in that. But at any rate, it rallied here for a few days and made a high at 409 this past Monday, then fell back below its red line, the 20-day moving average, the green line, the 50-day moving average, and of course it's still below the black line, the 200-day moving average. So please know, as I'm sure you know by now, we are approaching the third quarter earnings season, and FedEx is always the one of the earliest companies to announce earnings. And because of who they are global. Of course, they carry packages all over the world, and if companies don't have the products and packages for FedEx to ship, one aspect of it is, well, then we know that the economy itself is having a problem. So this FedEx announcement was definitely negative. It hit most of the market really, really hard. So we're down here now at 383.84. So basically up around 383, 382. So our next line of support here, we're going to come down here. We're just dancing on this 383 line right here. Then we come down here. Our next line of support is about 373 to 371. Of course, then our line in the sand is still a number you're going to want to put at your elbow, which is I don't know if I can write it here, 362. Please know that next week, we are also going to have the Fed's meeting next week, and they will be announcing interest rates. So don't assume that it's going to slow down and get smooth from here on out. We're probably going to have at least a couple more weeks of bumps to deal with here. September is usually a volatile month, and is really living up to its that particular mood and manner in this month. Okay, so let's go on and look at the Invesco QQQ. Of course, this is the ETF that follows the NASDAQ 100 and all of the high momentum stocks like Apple, Amazon, Microsoft, Tesla, Netflix. That whole group is involved in the QQQ here. And today when I captured this chart, the Qs was trading at $286.26. It's trading at 29% below its all-time closing high back in November. You can't see it here at 403. Now we know that bear market is 20% lower than the all-time high, and we're trading here down here at 29%. So not a very pretty picture just at the moment. Now we know that when it came out of the gate in January, it started falling with the market, rallied in March like everybody else, but not quite as strongly. Note how that 200-day moving average hit the Qs on the head earlier this year, earlier than it hit everybody else on the head. So then, of course, the market fell down, finally made it down to its June lows down here at 269. So that's our line in the sand here. Then it started rallying back up. The momentum stocks moved back up above the 20-day, the 50-day. That was a good thing, and we had this pretty decent rally here. I've commented that the one we have here, and even on the SPY, the rally was a pretty steep rally. I mean, this move was steep on the chart, moving higher. The best kind of rallies you want for sustainability, if there's such a thing, would be more at a 45-degree angle. But I mean, we take it where we can, but this is something you want to say, okay, I'll pay attention just in case, and fall over it did. It got up to the to 334 on August 16th, never could make it to the 200-day like the S&P did, and then fell back down. And it dipped down to 290 on September 6th, and then rallied up to the first of this week, and then of course this week we've fallen lower. We're down here now again below that support point, and we're at 287.26. We do have now, if it starts higher, we've got the resistance up here at the 50-day and 20-day. We do have more price support here, and we're going to need it, I think. We have more price support here at 280, at 276, which is a little farther down. And the red line, of course, which is 269 right here. So we want to keep an eye on these levels. We do not want it to go below 269. That is for sure. That's our red line right here. So please be very, very careful in the coming week. Bottom fishing is a lot of fun unless you catch a falling knife, and then it isn't as much fun. So please, 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 the market's ticked off right now. We've got more stuff coming up. So be very, very careful with whatever you trade. But I know you all expect me to bring up an ETF that might go somewhere, and I look through hundreds of ETFs. I did find this one that I actually feel like if it can hang tough, maybe it will be somewhere to hide out that will be positive. We're looking here at a daily chart of the Invesco Wilder Hill Clean Energy ETF, symbol PBW, has 83 holdings. Some of the top holdings are Enovix, STEM, Fluence Energy, First Solar, and Plug Power. Now you can't see it on this chart, but it made an all-time high in February 2021 at $138.60. And know that if you looked at a longer-term chart and went back further, from 2015 to the end of 2019, the PBW was fairly quiet. It just traded in a range from about 17 to about 29. Then it rallied hard in 2020 as EVs started coming into the market and it all became driverless cars. Then it fell, and now we can see it fell to this May low, as you can see here on this chart at $40.52. That was the low that it fell to after making that huge high in 2020. It rallied back up from this June low, rallied back up to 44, went over the 20-day, the 50-day moving average. But look, it couldn't make 3 closes above the 50-day moving average. So it fell back down here to about 44, then rallied with the market. Remember I said we all rallied here and made a nice little rally at the end of July here up to August. Through August, over the 200-day moving average. Well, that's not even a close. It's close to it. Moved over the 200-day moving average, but couldn't stay above it. So it made a lower high here. You can see this trend line I drew, the channel line. Came back down, fell back down to its 50-day moving average. Now that's telling right here that the PBW came down to its 50-day and then started higher. The 50-day is a great intermediate trend line many times, so that's a good thing if it can come down to it. Now in the last few days, when everything has been falling like a stone, and again, I've looked at dozens and dozens and dozens of charts, and they don't look this pretty. When everything is falling like a stone, the PBW has managed to stay above its 50-day moving average. So please know, in the coming week, if the market acts just a bit more positive and reasonable, and if the PBW stays above its 50-day moving average, which is now coming in at $55.67, I'm going to make this all very tight because I'm not in the mood to lose money for no reason. Of course, you can adjust it to your trading rules, but I'm staying real tight here. So if in the coming week the PBW stays above the 50-day moving average, I may, see this triangle here, I may add some shares to my trading portfolio with my initial stop is tight at $54. Then or if, I should say when or if, the PBW can rise above and stay above $62 for 3 consecutive closes. That means it's moving up to this prior move. I may, operative word may, add some more shares to my position. Of course, by then my stop is going to be a trailing stop. So you might want to keep an eye on the PBW in the coming week. Now, please know that September is seasonally a volatile month, as we just talked about, and this September is certainly filling that role. So this is a perfect time to take some time for you to invest in your trading skills. Take a few minutes right now to check on my online training programs and see how you can become a better trader. And believe me, you need good skill sets in this market, and it isn't that hard to do. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, very important in this market, how to trade the trend to profits, which is going to be perfect when this market bottoms out. For newbies, how to read charts, a really good, short, great program, 3 winning setups, ditto. And of course, again, we're all going to want to know how to bottom fish like a pro. These programs are timeless and can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen right up here, or even better, click on the orange button below. Until next week, be very, very, very careful out there. Please keep green on your screen. I'm Toni Turner, and this is The Market Now.